Look at where things stand right now. I want to talk about what's driving this because we're back up at 96, almost 90, or 93, almost $94,000. This, of course, we're down, but 76,000 was maybe the recent low. I don't know.
76.5, yeah.
76.5. John D'Agostino is here. He's the head of strategy at Coinbase Institutional. Tell us what's going on in terms of the coupling, decoupling. I don't really know because there's periods of time where it feels very coupled, then it feels uncoupled, then it feels like it's coupled up again.
Right. Well, first of all, thanks for having me. It's great to be back on. So when we talk about decoupling, we're really talking about neutral to negative correlation. And more specifically, we're talking about negative correlation when markets panicking on the downside. Nobody minds correlation when it's upside correlation. So, first and foremost, got to be super careful, right? This is a relatively short-term data set, April. You don't want to assume it's going to persist. I could be making a fool of myself right now, and today it could jump to a one correlation. The other thing you want to be careful about is, even if we understood exactly the reasons, and I'll get into what we think they are, just because this occurred now, it doesn't mean if that similar set of events occurred, we'd have exactly the same behavior. So just a disclaimer, be very, very careful. And that applies to gold, that applies to any asset. So the nice thing about my position is I don't have to guess as to what traders are thinking. We're kind of the center of the crypto ecosystem. So when you called me, I made a bunch of calls. And the pools of capital that have been buying during April, sovereign wealth funds, large institutional, long-term duration pools of capital, they're looking at it basically three ways. One is, if you think about the tariff announcement April 2nd, if you believe that that's going to have a spillover effect on global trade, you believe there's going to be less global trade, then much of which is denominated in U.S. dollars, then you think there'll be lower demand for U.S. dollars, that we refer to as de-dollarization. Well, some of the ways Bitcoin is used by these large pools of capital is they buy it in their local fiat currency, they hold it, and they sell it into dollars when they need it. Well, if you think dollar is going to weaken, then you don't do that anymore. And so you're holding more Bitcoin. And these, again, large insurance pools, sovereigns, et cetera. So that's one thing, is this de-dollarization trade. The second piece is that post-COVID, Bitcoin kind of got caught up in this levered tech trade, kind of just bundled into the QQQ, bundled into NVIDIA. It's not really a tech stock, but it kind of got associated with tech stocks.
Well, was it? I always thought that the issue was that there were retail investors who were taking their winnings, in some cases, from an NVIDIA or a Apple or Meta, whatever, one of the Mag 7, and then moving it into Bitcoin. And therefore, then it was all tracking because to the extent that then they owned that other stuff too. Whenever it went down, they had to sell out of stuff. They also were selling out of Bitcoin.
During the bubbly periods in tech stocks, that's not an unfair assumption. But I'll note one thing. So for the month of April, as you would expect, gold ETF inflows were massive. I think $8.5 billion roughly from the 2nd through the 22nd.